We found 220 new insider purchases, almost all of them totally useless, but a few will be high signal and can help us outperform. Let's take a look. So looking at the daily incoming stock trades, we can see the vast majority of them are sales. However, we're going to see a lot of 10b5-1 sales, a lot of tax sales, and things that aren't very high signal, and so because of that, obviously, we see a pretty massive decrease here. Only 5% of all the trades coming in were buys, so way below the median line here, but kind of to be expected. As you can see, last earnings season, we had some days with literally no non-scheduled, insider purchases, drip, dividend reinvestment, employee stock purchase, that kind of thing. So literally zero, and then very low numbers here. Gonna happen every earnings season for the most part. Nothing to be alarmed about, just means, not a ton for us to look at on the buy side, at least in terms of things that might be interesting. But we do actually have a couple today. As a quick reminder, we're looking for those unscheduled sales, ignoring tax sales, dividend reinvestment, private placements, etc. We want them to be abnormal. This could be really anything: unusual timing, flipping from buying to selling, or vice versa, a long time period between their previous buy and their buy now, whole bunch of stuff, buying the dip, etc. The history of success: obviously the best signal is an insider that consistently buys the stock before it rises or sells before it falls. And then, multiple insiders buying, really large buys or sells can all be interesting. And like I mentioned, the price action, buying the dip, selling the rip, that kind of thing can be quite interesting. So let's go take a look. We're looking at Costco, but let's go take a look at all of the top insider trades here. We'll start with bullish only. Let's get the most recent trades coming in. Start with purchases, and we will sort by transaction value and then see what we can find here. So right off the bat, down at the very bottom here, we see a handful of just like tiny dividend reinvestments, totally useless, $1,000 trade, not useful. You'll notice Horizon Kinetics, Murray Stahl, Milton, they all are buying the stock very regularly in really small purchase amounts. Nothing really to do there. There's not very interesting purchases. But we can move up to the top here where we can find some more interesting purchases. We've got the CEO here at W&T Offshore. I think this is actually a pretty interesting purchase right off the bat. And the very first reason is, if we just go solely looking at the insider trade here, you might look, if we look at her history here, his or her history, I'm not sure. The 1 month, 3 month, 6 month, 1 year, the buys returns are, a couple of them I guess are positive on average, but the win rates are pretty low, only 30%, 70% is pretty good, but not very good returns. But then, only 10%, only 50%. So not a very good track record, which we'll probably see borne out if we look back here. A bunch of buying up here that simply did not work out in 2019. Another purchase down here in 2020 that also didn't work out, at least in the, the relatively short term, did over the next year or so, it looks like. But so, this fails our test of like the insider having good historic returns. This would actually be a negative, just right off the bat, we're starting with a negative mark on this insider purchase. But it gets interesting for a couple of reasons. One, if we look here, the size of the trade here, nothing too crazy, I guess. About probably a little above the median would be my guess here. Just quickly can look through the median's probably, this like 410 trade or something. So slightly above the median, nothing too, not abnormally large. However, hasn't made a purchase in about 5 years. So that right off the bat is pretty interesting. If we go straight to WTI, take a look here just to see if anybody else has been buying. So no insider trades at all since 2022. So those right there are huge. That's abnormal, right? That's a huge gap between buying there. And then if we go to CEO Watcher and we take a look, no, that's not where I want to go. If we go here and we take a look at that's not what I meant to press. Keep pressing all the wrong buttons. But we can see earnings coming up here, November 7th, which means November 7th earnings, which we can just go verify here. But if we look at their past filings, let's look at their 10Qs when they file their quarterly reports. If we look down here, September 30th is when the quarter ended, 2024, meaning the quarter is going to end September 30th, 2025. It is past September. This trade happened after September 30th, right? This trade happened in October, meaning the CEO, the quarter's over. They know, roughly speaking, the books are pretty close to being closed. They know how this quarter is going to work out. We haven't yet run the back testing, and I haven't really seen any papers or research papers or anything on this, but the hunch would be a CEO is very unlikely to be buying $500,000 of the stock when they know what the quarter results are going to be, or at least have a pretty good idea, knowing that the stock would go down and they'd announce a bad quarter. Seems that'd be unusual. That'd be weird to me if they decided to do that. So I think that's a bullish signal for this next quarter going pretty well. The results coming out and looking okay. Another reason why we find this interesting, it's actually up quite a bit. We can actually see that a little better here. The stock is actually up 50% in the last 6 months while still being down over the last year. So that's kind of something nice to see. A longer term downtrend. The stock probably, which we'll go take a look at, but probably looking a little cheap on valuation metrics, but the momentum has flipped and is turning in the right direction, which we can see here. Just crossed over, well, I mean, not just, but a few months ago crossed over the 200-day. You've got the earnings revisions going up in the proper direction, even though the stock, it went up a little bit, but not a ton since those earnings revisions. So you're seeing earnings move in the right direction. You got the stock price moving in the right direction. Then we can go take a look at, what do we want to look at here? Let's go look at the valuations here. EV/EBITDA, we can see, is trading at, it just took a step down actually, which this is probably from that earnings, which we could go take a look at. But my hunch would be that the EBITDA numbers came in pretty good, but the stock price didn't really move up, causing EV/EBITDA now to be, not at all-time lows, but trading definitely, a standard deviation lower than their median, and definitely on the low end there. So another positive there with this positive, or another positive with the low EV/EBITDA multiple is a big win. And then we'll come in and see why are things looking positive. Well, let's look at adjusted EBITDA, increased 10%, 9% quarter over quarter. So that's, why that number, the EV/EBITDA is looking a little better there. They reduced net debt, also looking good. Debt reduced via financing and payoffs. That's looking pretty good. CapEx a little higher, maybe $19 million spent in H1. Full year guidance looks like it's going to be about double that. Anything else here that's interesting? They increased liquidity because of their debt reduction. So a lot of positives there. There's one other thing here. Let's see if they, production. Q2 production, another good one, up 10% quarter over quarter, driven by workovers and ramp up of acquired fields. They do also mention somewhere down here, let's see, Q3 production. Look at that, their guidance now is they're guiding for even more barrels every day, which is good, driven by a ramp up in acquired fields and ongoing workover/recompletions, which they then mentioned down here. Production growth drivers. What is the driving strong production ramp expected in Q3 and beyond? Why are you guiding to good production? And they basically mentioned low cost workovers, recompletions, and the ramp up of acquired fields. So we've got a bunch of benefits here. We've got good earnings coming in. We've got estimates going up. We've got the stock price moving in the right direction. It's trading at a relatively low valuation. They're guiding towards good production. And then on top of all of that, policy and regulatory support for Gulf production. What actions might the Trump administration they're referencing take to incentivize Gulf of America? And they highlight potential royalty reductions, a rollback of burdensome policies like the Idle Iron Act, and the administration is focused on maximizing resource utilization and streamlining regulations, which should benefit offshore producers, which the CEO also mentioned in here somewhere. So the one benefit here is we've been an active operator in Gulf of America, which obviously Trump is a fan of. So they have some tailwinds there from the Trump administration. They mentioned it in the opening calls here, but then as a specific response to an analyst question, they mentioned basically benefits from the Trump administration looking for ways to support the industry and incentivize production, especially in the Gulf of America, which then they answer the whole question here. The CEO is not a fan of a policy brought forward by the Obama administration, but basically mentioned President Trump have made a pledge that they're going to do so in reference to the administration has taken a very strong position in the fact that we want to maximize and utilize our ability to conserve the natural resources of the Gulf of America. So you've got this whole Trump headwind along with all the other stuff we mentioned before. So even though the insider returns aren't good, I think all of this combined sets up a very, very promising setup for W&T Offshore. As you can see, the stock's up 14% today, which when we found this insider trade this morning and sent out an email before the market opened, it was not up 15%. So I don't know if they read my email or what, but it seems like people kind of agree with me that this quarter is setting up pretty nicely for W&T Offshore, causing the stock already up 15% since the market opened. What else do we have here? I'm going to just skip over this one. I'm not a big fan of REITs, so we're just going to move past that since we don't have as much time. But I wanted to take a look at this one too, where we've got Jamie Welch, another CEO at another oil and gas company now, or I don't know if they're CEO, actually another officer at a oil and gas company. But the setups here are a little different. So I think it's interesting to look through and compare this compared to WTI. You can see the stock down, so a very different outlook, just price action, down over the last year and down an even faster decline now over the last month, which I don't know if they really tell us why exactly. I'm not sure if any news came out. We can go take a look. If we look historically at this person's insider purchases, just look how they turned out. They actually look a little better overall, I would argue, especially over the longer term here as we get to more like the 1 year range, which all of these should be across the 1 year mark. So part of the reason why you're only seeing 2 wins up here is just because a lot of these are marked as dividend reinvestments or public offerings, which we tend to remove out of their returns. But you can see even with those, I actually bet this one's like not actually a dividend reinvestment. So this is where it gets a little tricky because they'll mark this as, or they'll mark it over here. They'll say includes an additional 86,000 shares acquired by Mr. Welch due to their company's dividend and distribution reinvestment plan. But it's not saying this trade is not actually a dividend reinvestment. It's just that he owns shares from a dividend reinvestment. So we should actually be paying attention to those in terms of the returns, which would actually juice these returns quite a bit higher, I would venture to guess, because all of these should be positive. So overall, I'd actually say this CEO or this officer, they don't actually even tell you, which is kind of interesting. Like they say see remarks, but then there's remarks and they don't tell you what position this officer has. So they probably do in a different one, but who are you? So it is the CEO. So there we go. Look at that. So overall, I'd say this CEO purchase just on its own is actually more interesting. But if we go look at the kind of the fundamentals of the company or some news or data or any of that about the company, it's not as interesting. It starts to lose a little bit of its luster because we have, earnings not really moving anywhere, the price action not looking as nice, sitting below the 200-day moving average. If we come down to any press releases or anything, there's no like news or anything to really tell us why. I mean, no real new news or anything telling us why the stock might be down recently over the last month, 15%. But then if we go look at earnings calls as well, we will start to see that their numbers are going slightly positive over the last year. Not as nice as WTI's. They're also a much bigger market cap, but not as nice as WTI's. But then quarter over quarter, not looking quite as good. And they also have some CapEx spend that is increasing, or pretty high at least, because of spending on King's Landing and the ECC pipeline, which a lot of that spend is expected to happen in H2, which is where we're at right now. However, some of the positives here are that, well, and then as like their leverage, again, with their debt, their leverage ratio is actually going up a little bit. Probably nothing really to worry about, but all of these things not quite moving as positive of a direction as for WTI. One thing on their favor is that they do have the $173 million share repurchase program, which is $173 million of the $500 million program they use, buying the shares at $43 a share, which is quite a bit above the $38.50 it's at right now. Buying back 2.5% of shares is certainly pretty notable. CapEx, as we mentioned, so here's another big one. EBITDA guidance. Remember we're looking at EPS guidance, but both for WTI was heading in the right direction. They actually had to revise down guidance here at Kinetik Holdings, plus CapEx, as we mentioned, is going up. So all of these would paint a little bit less interesting of a picture, which they do talk about a little bit here, but overall, there wasn't much to really glean in terms of why this would be, why maybe there shouldn't be any concern about some of those factors that we mentioned before. So overall, I just think the story, and then the one other thing, if we go look here at some historicals, if we look at EV/EBITDA here, they're kind of actually sitting pretty flat at what their average is. So, which actually would be kind of interesting. So they're at a 9.2. Let's go see what I don't know if these companies are exactly, they're probably not exactly comparable, but way lower at 2.5, which again, they're probably not. I actually don't know exactly what these two companies do, kind of outside the scope of looking at why the insiders might be buying. It's actually a little bit irrelevant in some ways, or not super important, unless, the only reason it kind of gets important is that which field it's in, if you're trying to craft a story around that theme or that field overall, which in this case, the theme would be just the Trump administration being very pro natural resources and onshoring those natural resources, or bringing them, making sure America is producing things like oil. And then because these guys are in Gulf of America, that's obviously a big benefit, or what Trump administration calls Gulf of America at least. So overall, I'd argue the story on WTI is actually quite a bit stronger than the story on Kinetik, even though the CEO purchase at Kinetik is probably, just based on the CEO purchase, I think it's a little higher signal CEO purchase at Kinetik Holdings, but I prefer WTI. I think that's a little better setup. However, I would also say we have the same argument here, which is that in terms of the earnings, if you remember, they have pretty much the same earnings date, or pretty close. So November 5th. So we have the same situation. Their earnings are closed, like their books are basically closed. They know how the quarter's going, and you've got the CEO buying. Generally speaking, I would think, that would mean that their quarter is probably going to go okay. It'd be odd if a CEO is buying and the quarter is not going to work out. A couple other that we can just quickly look through here. I think we've got CarMax, the CEO buying. If you paid any attention to the market, CarMax got crushed after earnings, or a director buying, it's not even the CEO. Just historically looking back, the previous purchase this director bought also didn't work out. I don't even have to go through this stuff, but if you go look at CarMax's numbers, their last earnings was terrible, and there's a lot of legitimate concerns, and I don't think an $80,000 or $90,000 purchase by a director outweighs a lot of those legitimate concerns. If we start to see more insiders buying, I maybe start taking a look, but we'd have to have some sort of reason why we think that their last earnings report report is not actually indicative of problems going forward, which, nothing from that last earnings report gave me that feeling yet. Another one that's, you might think could be interesting here is the Sportsman Warehouse. We've got the CEO here buying the stock, bought at similar-ish prices not too long ago, 369 to 288. So bought at slightly higher prices, I guess, not too long ago back in June. And then if we go look at all of the insider purchases, we will see that a director also bought here. This Richard McBee also bought at the same time back here, and then they're buying again here. If we look back though a little further, look at like October 3rd, 2024, same exact date, and you got the same exact two buyers. We can look back a little further to 2023, and we look here at the beginning of October, and we've got this director buying the stock. So it kind of looks like they just buy pretty regularly in this October timeframe, and it doesn't, like, timing wise, that doesn't seem to work out very well at all. So I'm not really sure if these are that high signal of insider purchases. Also, just going through the numbers at Sportsman Warehouse, I couldn't really put together a story for why it might be interesting. I think the only semi-interesting thing here, I mean, the stock's pretty expensive, or it's at least not cheap. The only maybe interesting case you can make here is that they do have an exclusive agreement with the gun manufacturer, the gun company called, the heck is it called? Look here, oh yeah, with Byrna Guns. So after that Charlie Kirk stuff, maybe they saw an uptick in like gun sales, or that could help them. That's kind of the only thing I could really figure out. I mean, they are up quite a bit in the last 6 months, I guess, up 116%, but fairly expensive on a multiple, which we can just go look at. So yeah, they're on the higher end, at least of EV/EBITDA, which is probably what I would use. They're on the higher end of their historical, whatever you want to call it, their historical average of EV/EBITDA. So not particularly inexpensive. I don't really know what the story would be here. It doesn't seem like these are particularly unusual insider buys, so not super interesting in my opinion. The last one that's kind of interesting, and it's only kind of interesting solely because of this insider buy, is we've got the CEO here at Sologenics. Now, as you can see historically, if we take a look, one, hasn't purchased in 3 years. Two, it's his largest purchase ever, even though it's only $20,000, which is pretty small. However, the company is only worth like $5 million. It's a tiny microcap company. So $20,000 is still small, but it's less tiny when you take into account how small this company is overall. Looking back historically, the only reason this is kind of interesting is we have a biotech company, and twice before has he bought within a couple months of a pretty sizable stock increase, going from 340, 330 up to almost 500 just a few months later. And then this really big one back here was buying at like 240, and the stock went up over almost to 800. So, a 3x or whatever it might have been at that time, which you can see is 3-month returns, only a 3 out of 7 win rate, but 60% returns in those 3 months, buoyed by these two, a couple of these huge returns. This one seemed to work out all right as well, 117 up to 212. So the fact that like 3 different times he's kind of bought the stock within pretty close time frame of it going way up, and the fact that we know this time frame is pretty condensed because all of them happened within 3 months. On top of that, it's a biotech company, so those are always liable to have huge pops. I think this is one of those ones where tiny market cap, very risky, can't make it a big position, low volume, all that kind of, all of those caveats apply. But, it's one of those ones where like you might get a pop of 100% here in the near future. And if not, you just dump it after a few months if it's not working. So I think, a semi-interesting setup there. Now let's take a look to see if we've got any sells. So CoreWeave, again, we're continuing to see all sorts of selling at CoreWeave after their IPO. I don't think it's particularly high signal, but the Magnetar still has 63 million shares, so they've got a lot more money they could sell. I wouldn't be surprised if they don't stop anytime soon. It's already the most sold stock in the last 30 days. And it is a little bit of selling pressure, right? So if the buyers start to dry up here, it'll help drive the stock down a little bit, but it has not really slowed things down too much. As you can just see, the stock has continued climbing. We've got Vlad here making a 10b5-1 sale. Robinhood now is actually one of the most sold stocks as well, but again, this one's going to be fine until the market cools off. At some point, people are going to stop gambling in the stock market so much. A lot of those retail investors will kind of get back out, but until that happens, this stock is fine, and these 10b5-1 sales I don't think are anything to worry about. A lot of just kind of the normal people up here at the top. Tim Cook making a 10b5-1 sale, Qualcomm 10b5-1 sale, just all sorts of 10b5-1 sales here. So really, I don't know. Yeah, that's why, you remember we had this huge delta between the number of buys and sells, but it's just driven by so many 10b5-1 and tax sales, so many. So we could take a look at something. Let's just see here. Any good returns? This guy, pretty consistent selling, just not anything interesting there. What about, that's a tax sale, not interesting. This is going to be a 10b5 or this is going to be a 10% owner, consistently selling, not very interesting. Bill Pereira here, IDT Corp. This one might actually be interesting. The only reason being, let's take a look. Let's just see what he's selling here. Common stock just looks like kind of normal. Yeah, kind of looks like pretty normal insider selling there. If we take a look though, what's kind of interesting is selling after a drop like this is not actually something you see all too much. I haven't yet looked into this company. Let's see, different insiders sold up there, timed that pretty well. Historically speaking, insider sales overall, not super interesting. If we look just at Bill here, we can end with him. If we look just at Bill's history, also not, I kind of nailed a couple up here, did not nail these two, so I wouldn't say not particularly high signal there with those. But the only thing that kind of makes this interesting is that you don't normally see insiders selling. You got this big earnings dip, which I believe I had just recently asked Google Finance. Let's see what Google Finance has to say. Why did IDT Corp fall after earnings? Because EPS missed. The company reported an adjusted EPS of 0.76, which fell short of expectations. The absence of a one-time tax benefit, which is why they had a decline in GAAP net income. They have the natural retail solutions segment. One of their growth drivers experienced increased customer churn, currency headwinds. Despite these challenges, they still had, some adjusted EBITDA growth, some strong segment growth, and they provided EBITDA guidance that was up 7% to 10%. So this is one of those things where if we saw insider buying, you might be like, okay, insider buying after an earnings dip with some of these concerns around like churn and the tax benefit seems like that could be a one-off. If this churn, if they came out and said, hey, we have no real concerns about this churn, we think it's just a short-term thing, and you've got some insider buying, you'd be pretty interested in looking at the stock for a turnaround. The fact that we're seeing it die down like this and you've got the insider dumping the stock is not something we see all too much, and not something, it looks pretty cheap on some of these numbers. Yet this is one where I'm like, if you were buying, I'd be pretty interested. The fact that you're selling is odd to me and would have me quite concerned, why you would be still dumping more of the stock when it's going down quite a bit. So I don't know if that's enough. I'd have to look through. I didn't read through the earnings transcripts or anything yet, so I'd have to take a look at some of those to see if there's bigger reasons to be concerned here. But overall, I think this is a pretty interesting insider sale, which I'm actually going to, after today, I'll run some back tests on insider selling after a stock dip of 15% plus. And we like to look at stocks dipping 15% after a catalyst and insiders buying. I'm gonna look at the same thing after a dip and see insiders selling and see what's going on there, because that's a pretty unusual. Largest sale ever as well. I think something strikes me about this one of like, why would you be selling at this point, that I think is pretty interesting. So you can head over to CEOWatcher.com, look through all of these yourself, do your own sorting and filtering, etc. And also make sure to like and subscribe, and we'll see you next time.